In this piece, I want to talk about improving your credit score. Why should you be bothered about that? Well, if you want the best rates in town, you've got to have a healthy credit score. So my advice to you is to get hold of your credit report, not your credit score. Get your credit report. And you might want to write this down. There's 3 different agencies I would recommend: Experian, Equifax, ClearScore. All these guys offer free credit reports. Most of the lenders use these agencies to access your data and ultimately make decisions on whether they're going to approve, decline, or offer you less than competitive deals. So it's in your interest to take some responsibility over the data that's in this report. Because the first thing you should do, and by the way, I suggest you do this annually, make it an annual review to look at your credit report and look at the data within it. Because so often when our clients do that, there's errors in there, there's mistakes in there. And it quite often, if you don't do this review, the only time you find out there's an error or a cock-up by the credit provider is when you put an application in and you're getting declined. And the feedback from us as brokers is, yeah, your credit, there's something wrong with your credit score, and you're up in arms because you don't know anything about it. So be on the front foot. And it's part of your getting your ducks lined up. And being mortgage ready, so that when you're good to go with a mortgage application, you already know that your credit report is nice and healthy. So there's a few tips here. The first one is around moving home, because there are a few pieces of credit that or data that's in your credit report that quite often are overlooked when you move home, because it doesn't seem on the surface to matter when you've gone from address A to address B. One of those is your bank statements. The vast majority of us, we're online, aren't we? We don't get paper bank statements. When did you do that? Is it the 1980s? So you don't get them through the post. So you don't think, oh, I need to update my bank about my change of address. But you do, because that bank account is on your credit report. And if it's still linked to your old address, it can be an issue. Likewise, being on the voters roll or electoral roll. Not only is it a legal requirement to be on it and on it at the right address, people forget when they move house. See, they don't think, oh, I've got to change electoral roll to the new address. They might wait until that card comes through the post 3, 6 months, 12 months down the line. Be on the front foot, be proactive, get yourself on the voters roll at the right address as soon as possible. Because here's the thing, you put a mortgage application in, and your mortgage application paints a picture, tells a story of a variety of things about you. And then the underwriter looks at your credit report and there's a mismatch. You're saying, I live at property A, your credit report or parts of it is saying they live at property B because of these things that have not been updated. So at the very least, there will be delays while we untangle this mess and we try and give some clarity to the underwriters. And trust me, it's not as simple as saying, oh, I'm sorry, the applicant forgot. I can assure you it's more complicated than that. We have to provide a range of documentation, and quite often these are not at hand. So look at those things, certainly if you've moved home recently or you're about to. Now, credit cards is another thing. Look, obviously they're prevalent. Most people out there have got a credit card. And there's this old saying, isn't there, that if you want to improve your credit score, get a credit card. Well, I want to dispel that myth straight away, because the first thing that happens when you apply for your credit card and you get approved, what happens? Your score drops. It doesn't increase, it drops. Why does it drop? Because the credit card company have given you pretty much not quite a blank check, but a check for just, a £4,000 limit, £1,000 limit, a £10,000 limit, whatever it happens to be. And right now, they don't know how financially prudent you're going to be, how sensible you're going to be, or otherwise. So until you've made some payments back, your credit score actually drops. And then over roughly 6 months, as every month you start making your payments, your credit score starts to ratchet back up. And then it starts to improve over time. But it's not an overnight thing. So if you are wanting to put an application in tomorrow and you think, oh, I'll get a credit card today. Don't do it. Stop. Too late. You need about a 6 months window to make any sort of positive gain on your credit score. Now, second point on credit cards is about your utilization. In other words, how much are you using of your credit card balance as a percentage of its limit? Now, if you're paying the full balance off every month, doesn't matter, that will still add positively to your credit score. If you're making lump sum payments, again, that's great. I'm talking about you guys that are making the minimum payment. In other words, every month you're rolling across a big chunk of that credit card balance to the following month. Now, there's a bit of a sweet spot here of up to, I would say up to about 70% of the credit card limit would be perceived as healthy and therefore will add to your credit score every month. Once you start to go well above that figure, that percentage, and you're heading towards 85, 89, 90%, and of course higher, then it actually has the reverse effect. It will start to take away from your credit score. So do everything possible to stay down around 70% of your credit limit or below. And here's the thing that I have seen so often, and it's such a false economy. You get people that are up at 90, 95% of the credit card, and they think that's fine because, look, I've not exceeded my limit. I'm simply managing things. And they've got savings. And I'm not talking about contingency savings. I'm talking about money's own over and above that. And they're earning 2 and 3 and 4%. Because you know what? They like to see on a statement every month that we've got 2, 3, 4, 5 grand, 10 grand, whatever it happens to be. It gives you a warm feeling. What a false, what a lot of rubbish to be earning 2%, 3% over here and paying 15% on your credit card balance. It makes no sense whatsoever. So take the money out of your savings, pay it off the credit card balance to bring it down. Not only is that saving you more in interest, but as I said, if it gets you down below that 70% figure, then it's actually adding to your credit score and getting you in that healthier position. Now, financial associations, what on earth do I mean by that? Well, this is where, let's say we've got a couple, whether they're married, you're together, you've got some form of credit on a joint basis. Is that store cards? Is that a loan? Is it a joint bank account? And then you part company, you get divorced, you separate, you go your own ways. So you disentangle in every way, but you've forgotten to do the joint bank account. Because do you know what? Well, I don't use it anymore. The ex-partner, the ex-spouse, yeah, they're still using it for their things, but it's not to do with me anymore, is it? I've gone my own way. What you haven't done is untangle that piece of credit. So on your credit report, you are jointly responsible for it. So guess what? Your ex-partner who's got a bit of an overdraft on that bank account goes over the overdraft limit for a month or two, because they've just missed something, forgotten something, or whatever's happened, gone over the overdraft limit. Guess what? You get tarred with that brush. You get seen on your credit report as being over your overdraft limit. So if you have party company, maybe it's happened in the past and you haven't even thought about it, get your credit report, go through all the open bits of credit, and if it's finished, get your ex-partner to open a brand new account or get your name taken off that bank account, and then you can go to the credit card company and have that financial association removed. Could be the best thing you ever did. Now, final thing is on defaults. We all have a certain level of pride, and sometimes that can come before a fall, where you have an argument with a company where you've got a form of credit with. And it might get to a point where you want to teach them a lesson, and so you don't want to pay. You don't think you owe them any money, or you think they should have reduced a certain balance, or whatever it happens to be. There's an argument. And to teach them a lesson, you stop paying. Or the reminders that come through the post, you just put them in the bin. You'll show them. What's happening in the background is that ultimately that credit company that's lent you the money is going to not only class you in arrears, but ultimately turn it into a default. And that will, of course, impact you on any sort of credit that you want to get for anything up to 6 years. So my advice is, if you've got any issues with these companies, even if you think you've paid, it might be worth just paying them what they're saying you owe, but then have your argument, then put your complaint in at the same time. Because if it turns out you're on the right side of being correct, they're going to refund you and everything's fine. But if for some reason they can demonstrate that you are incorrect, then because you've already paid the extra amount of money, your credit report is intact, it's healthy, it's not been smashed to bits. So you have to really, really take responsibility for your credit score, your credit report, and look after it and nurture it. It will then look after you in the future. Now, final thing, I just want to make a quick offer. Look, we have a link below this piece. There'll be a link to our online diary. If you're unsure at all about whether your credit report is healthy, unhealthy, what is it saying? I can't interpret it. Can I improve it? What are the tips and tricks? Send us a copy. Have a review with us. There's no cost. Send us a copy of your credit report. And as advisors, we'll have a look through. We'll give you some feedback. And maybe, you never know, we might be able to improve that score. And as I said, then you'll be in the right space to get the best deals in town.